Wishing you a fantastic Friday. Good morning. Welcome to today's episode of Morning Well. We touch upon three things. Dow above 34K for the first time. US 10-year yields fall sharply and earnings roundup. The Dow closed above 34K for the first time Thursday after strong earnings and upbeat economic data sent stocks climbing. The S&P 500 also notched a record close, its 22nd of the year. A powerful rally has pushed both indexes up 11% in 2021, and many investors believe the rollout of the COVID-19 vaccines and plentiful government spending means stocks have more room to keep rising. Shares of big tech companies pushed indexes higher as the yield on the 10-year US Treasury note recorded its largest one-day decline since November. Apple shares gained about 1.9%, while Microsoft was up about 1.5%. Overall, the S&P was up 1.1%, the Nasdaq was up 1.3%. Treasury surged despite strong US data, and no one is quite sure why. Yields on the 10-year declined as much as 11 basis points to below 1.53, the lowest since March 11th before halving losses. The US dollar struggled to rally on Thursday despite very strong US economic reports. According to the latest release, the US economy roared back to life in March and early April. Retail sales, the most anticipated piece of US data this week, blew past expectations as stimulus checks and vaccinations fueled robust demand. Consumer spending jumped 9.8% in the month of March, easily outpacing the market's 5.9% forecast. This was the strongest increase since May of last year. Gas and auto sales contributed to the rise, but spending ex-auto still rose 8.4%. Jobless claims also dropped almost 200K to about 576K, the lowest weekly reading since the pandemic began as restaurants, retailers and other businesses start to rehire. Manufacturing activity is improving as well, with Empire State Index rising to 26.3 from 17.4. These overwhelmingly positive reports drove stocks to fresh record highs and should have driven the greenback upwards, but there were very few buyers for the USD. Instead, the dollar followed the treasury yields lower. So what's happening there? Some trader talk in the market is that higher yields have lured buyers, apparently aided by technical factors such as renewed demand from Japanese investors. Banks and insurers in Japan had contributed to a wave of global selling in Feb, according to investors and analysts, prompted by efforts to finalize their investment returns for the financial year that ended on March 31st. Now there is evidence that they are buying again, with new government data showing that Japanese investors bought an equivalent of about 15.6 billion of overseas bonds on net last week, the most since November. So on the one side, there's buying from overseas investors, pushing the yields lower. Couple of other reasons. A large part of the boost in spending was driven by stimulus check, which will last at most for another month. And most importantly, there's little evidence that inflation is getting out of hand, which is keeping the rise in yields under check. Last, a roundup on the earnings front. BlackRock shares gained about 2.1% after the asset manager said its quarterly profit rose nearly 50%. United Health Group shares went up 3.8% after the healthcare services company posted a larger profit and stronger revenue on the year in the first quarter. Bank of America revenue from sales and trading jumped more than expected, while equity underwriting fees more than tripled. Still, shares fell 3% as investors worried about tepid loan growth and higher costs. The firm also announced a 25 billion share buyback. Citi reaped the most revenue from stock trading in the first quarter since 2009, while fees from underwriting shares quadrupled, helped by the firm's dominance in SPACs. The company will exit retail banking in 13 markets across Asia and Europe. So that was big news. Morgan Stanley closes out big bank earnings before the bell on Friday. Analysts are expecting strong top-line results driven by robust quarter for equities trading. Airline stocks, however, traded lower after Delta Air said it recorded its fifth straight quarter in the red. On the positive side, the company said passenger revenue rose 50% in March from a month earlier, noting it is in active recovery mode. On Wednesday, American Airlines said it is preparing to operate a nearly normal summer schedule in anticipation of recovering travel demand. PepsiCo reported as well. Core EPS and net revenue topped consensus. That's the update. Have a wonderful weekend ahead, and I'll speak to you on Monday.